Bitcoin caught a bounce, but are we out of the woods? Yesterday we left with a breakdown putting us into this falling wedge formation. We speculated that if we could catch a bounce on the lower trend line, which we did just here, that we were actually setting up bullish. This falling wedge shape often precedes a breakout and we have some issues to overcome first, however. Firstly, if we pop on the indicator, we can see that we've got this band of resistance, and for this to really flip bullish, we're going to want to see this resistance become support as it was previously back here. So we're going to have to see prices above about 27,200. Secondly, if we go onto the weekly chart, we can take a look at the Fibonacci levels. So let's just set this up. So if we take a look at a Fibonacci retrace from this lowest point, which is just at the turn of the year, to the height of the recent breakout, we can see that the 38.2% level sits at exactly 25,000. So we'd expect to retrace to this level, and the formation that we're in could probably see that happen. If we continue within this shape, printing these lower lows and lower highs, we could retrace to the 38.2% level and bounce. That potentially, with some of the problems that Bitcoin's facing at the moment, is the most likely scenario. And I would say that's a midterm bearish scenario, long-term bullish, as we would anticipate to bounce from that level. Another kind of long-term bullish scenario is these two weekly moving averages. So we can see that the green line, which is the 20-week moving average, and the white line, which is the 50-week moving average, are converged and currently providing price support. If the green line was to cross above the white line, that would be referred to as a golden cross, effectively where a fast moving average moves above a slower moving average, and it really is an indication of an uptrend. Now, on the lower time frames, that happens relatively frequently and is, whilst it's often quite publicized as being bullish, it often doesn't play out that way. However, on the weekly, it's far rarer, and indeed the last time that happened was all the way back here in 2020. Let's just have a look there. So that was the 27th of April 2020, which was pretty much exactly at the time that COVID was becoming a major issue, and we can see that this crossing is one of the key instigating bullish technicals that goes on to this kind of 800% price rally. Now, I'm not anticipating that we see an 800% price rally, certainly not immediately, or certainly not any kind of parabolic movements, if we're to get the moving averages to cross here. But against the backdrop of potentially some of the problems that are restricting Bitcoin price moving out of the way, i.e. we potentially have a resolution coming in for the US debt ceiling, and maybe we're going to see rate pauses, CME still, although the odds are shifting, still favouring a rate pause on the 14th of June, we might see some bullish uptick. And if we, in a few years' time, we could be looking back just as we did on that cross in 2020 and seeing that as an instigating technical. Ultimately, we are very long-term bullish. You know, you can check our previous analysis. We'll generally try and show something that kind of illustrates how we think price is going to work in the run-up to the next Bitcoin halving. The one last thing to mention, we covered this yesterday, but today is the day that the data drops, which is the core personal consumer expenditure price index. So month on month, we're anticipating that to come in at 0.3%. If it comes in any higher than that, that should set into motion the bearish scenario outlined, so a retrace to probably this 25,000 level. If it comes in lower, that could be bullish. It's certainly not going to give us the 800% price rally, but it certainly could see us bounce, continue the relief rally that we started yesterday, and potentially test the upper trend line around 27,800, I would imagine. Any questions down below? We've just launched a server on Discord for free trade analysis and signals, so check that out. The link's below. Thank you very much.